Hi everyone and welcome to this new webinar. I'd like first of all to welcome all of you. Thank you for joining us. The topic of today is going to be very important. We'll be discussing pure price action, how to trade and the FX market using price action. So think of it as if it is going to be like an introduction to price action trading. I hope that this webinar is going to be like fruitful webinar for all of you that can help you in trading, that can improve your way in trading one way or the other. So what is price action? Price action trading is simply a methodology for financial market speculation. This method does consist of the analysis of basic price movement across time. So it's all about having like a chart. I'm going to open a chart for you here. This is called a naked chart. A naked chart means a chart that does not have anything on it. It doesn't have anything on it, just the price action, just the price itself. Okay. So if I zoom out here, like this is the price action. This is what we're going to be dealing with. Okay, guys? So it's all about, again, the study of the price, the past, what happened before might happen again in the future. It's all about this thing. You know what I'm saying? So it is used by many traders and often by huge or maybe professional traders, hedge funds, and many other people who are really aware of how it works, how money is made in this market. Why they're doing so? Because they want to find a good way to predict the future movement or the future direction of the market. So simply put, price action is how price changes. How price changes. You're gonna just be focusing on the chart itself all the time, almost all the time. You'll be focusing on the chart itself, see how the price behaves, and based on what happened before, you're gonna take a decision. You gotta decide whether you are going to enter the market or not. So again, it's all about pure price action. Keep in mind that price action trading doesn't care about the fundamental factors. The fundamental factors are really important, but when it comes to price action trading, fundamental factors don't really matter. Okay. Fundamental factors simply influence a market's movement. It's all about, as I told you, the market, the drivers of the market are everything, but when it comes to price action trading, it doesn't matter. So in other words, price action trading is a pure form of technical analysis since it includes no second hand or indicators or whatever. It's all about the price itself. Price action traders are concerned with the first hand data a market generates about itself, its price movement over time. Usually, if we zoom in a little bit like this, you're going to find that any candle on the chart would give you four important pieces of information: high, low, open, and close. So these four prices, these four prices are what make what we call a candle. A candle is a small part of these candles, of these bars that you can see in front of you. So they are the components of any trend that you can see on the chart. This is a downtrend, for instance. It does consist of many candles, one by one, one after one, and you're gonna find that you have a direction, a trend in the market. This is simply how it works. So it's all about focusing on these small candles, the components of the huge movement of the market. Okay. So first-hand data, first-hand data, no second-hand, no second-hand indicators, nothing else. You'll be, you'll depend only on these four important pieces: high, low, open, closed, that are the components of any trend line or any movement on the chart. Okay, guys. So before I carry on, do you have any questions on this? Should I carry on? Okay, so let's continue. Price action analysis allows a trader to make sense of a market's price movement and provides him with explanations that serve as way for the trader to build a mental scenario to describe the current market structure. Experienced price action traders often, let's say, and think of this as if this is gonna be like their unique mental understanding, and this simply can help them to improve their way of trading, improve their profitability. For instance, if we go to a lower time frame like the 1 hour, um, just a minute, the 1 hour here. I want to get rid of all of these. Now, this, for instance, is GBP/USD 1 minute. Now, here is a resistance level at this very level. And as you can see here, that the market is simply heading downwards. I believe this could be, there could be an opportunity where we can go short, as a matter of fact. So here, as you can see, just like this, just like this. A pullback to the upside, then a movement to the downside, just like this, just like this. Okay, now I didn't use any indicators. I didn't use anything. I'm just keeping it simple. As price action traders often use the phrase "keep it simple." Why? Because we don't want to use any indicators that might um, uh, make it very difficult for us to understand what's happening on the chart. Now, when it comes to trading price action, we must be focusing on the chart itself. Since we are going to be focusing on the chart itself, then let's zoom in a little bit and see what's happening. Here is, for instance, as you can see, some candles on the chart. small candles on the chart. Just like this. Look at these candles. Here we have three candles, this one, this one, and this one. Let me explain here. Let me explain how it works. Now, this is a signal. This is a signal in the market that would tell me that I can go short. Why? Because as you can see here, what we have here, three candles, bullish one, this one, bullish candle, then a small candle, then a very bearish candle that engulfs the previous one. This would simply push the pair downwards like this. Why? Because this would reflect what's happening in the market from a psychological point of view. Buyers are going up, They are losing control. They are losing power, as you can see. And this could be clearly seen when you look at this small candle, very small candle. You're gonna find that they are losing power, they're losing control, and all of a sudden you're gonna find that there is a very huge candle, bearish candle that would engulf the candle before. This, from a psychological point of view, would reflect that the market is shifting, is changing its mind, it's changing its direction to the downside. So instead of having an uptrend, we're having here like a downtrend, as you can see on this chart. So this could be an early signal that the market is reversing, changing its direction to the downside. Just like this. Okay, is it clear? Do you have any questions before I carry on? Okay, so I'm gonna tell you now some important rules that you must follow. The first thing, that you want to do, spot you want to spot the most important support and resistance levels on the chart. They are going to be the reference. Spot the most important support and resistance levels on the chart. This is the first thing that you're gonna do. You want to follow the trend, wait for the price to reach, maybe we can say to land Why to land? Because after landing, we are able to enter the market. Other than this, we're just watchers. We'll be watching the market, nothing more than this. Okay. So what I'm gonna do, here is the price action. The market is moving ups and downs like this. Okay, I'm gonna spot support and resistance levels on the chart. Maybe this one would meet this one. Okay. I'm gonna wait. Follow the trend. The trend is up. We have an uptrend. This could be easily determined or seen on the chart by watching how the price is behaving. If you have like higher highs and higher lows, look at this: high, 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 higher highs, higher lows. So this is simply an uptrend. I'm gonna follow the trend in this case. I'm gonna wait for the price to land. What do I mean by saying so? I mean, I'm gonna wait for the price to reach the support level. Then here, there could be like an opportunity where we can go long. Where we can go long. Okay. Just like this. Okay, guys. So here I can go long simply, but I need some evidence. Evidence to show up on the chart. Evidence like what? Like candles. If a bullish candle would show up here, I would enter the market, I would go long. Let's go back to our chart and see what we have. Now, I didn't use any indicators. I didn't use anything. I'm just using pure price action. Now, this is a chart here. I'm gonna spot support and resistance levels like this. Just like this. Now, previously we had a support level here. The market went up like this, but it didn't show any kind of bearish candles below it. Should I enter the market? No, I wouldn't enter the market. Why? Because no evidence. No evidence, no entry point. So I'm gonna wait. Maybe this is gonna be a new resistance here. I'm gonna wait for the price to reach it to reach this level again, or maybe this area of resistance here. I'm not entering the market right now. I'm entering the market when the price reaches this area for the second time here. If it doesn't, I wouldn't enter the market. So I'm waiting for the market to reach this area. If the market reaches this area, I'm gonna go short. Open a position and go short. I'll just take like a few pips, maybe 5. Maybe I'll tell you 5, 6 pips. and close my position. As a scalper, I mean. So let's see here how it's gonna work. I'm waiting for the price to reach this area again, this yellow area. It went down before from this level. This might happen again here. Might happen again here. As you can see, I'm following the trend. It's a very bearish trend, as you can see here. A very bearish trend. It's simply continuing going downwards very sharply. The market is accelerating. I don't care, I'm just waiting for my opportunity. Okay. Very sharp. The second opportunity is when this level is broken 1.2120. If it is broken, a candle closes below this level, I would go short. So I have two entry points, one here and one here. Closes above. We need more momentum. I think there is a potential that the pair could be reversing to the upside again. But I don't care because I have a scenario to the other side. So I'm just waiting. Exploring higher time frames would be okay. Go to the 5 minutes. Could be building here like a base here. The main candle is very bearish here. We're seeking a new area of support. Look at this. This is a huge, strong area of support here. Will be seen on the. Let's go to the 1 hour here. So be careful. I believe going short from this area would be great. This did not happen in hours, actually. Look at this. So this is a new area of support. Let's wait for the opportunity to complete. Reversing to the upside, I believe. Or just following some easy rules. Then here we can go short. Let's see. This could also be okay if you want to go long, but your stop loss must be placed below here. Maybe I can go long here. I'm gonna do okay. 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 I'm waiting for the pair to reach this area of resistance. Okay. Reaching our resistance. I believe I could go short now. Short now was like 10 pips. So here, I'm gonna mark this point as sell from this area. Here are my limits. We just need 5 to 10 points. Okay. Okay. 3 points. 4 points. Here is my target. The target is here. Somewhere here. Okay. Reaching my final target. Entered here. Now 4 points. 8 points, including my the spread. Okay, going down. More business. Okay. Lower, lower, lower than the two previous ones. Lower the third, fourth, reaching your target. Reaching your target very soon. This one is lower than this and this and this and this and this. So this is gonna eat at least 5 candles, but the close must be below them. Okay. Another one. Look at this. It's going down. What gives us power is the fact that we are having a downtrend. Now your stop loss is above 1.2135. So we are playing in a range, in a safe range, I believe. So look at this. For the third time, the pair would touch this area. So here, the second, the third. So the opportunity again. Mr. Rami Araj has a question. He's asking me about the potential that the price goes against us. I'm telling you, Rami, that if the price goes against us, we already have a stop loss above this resistance level 1.2130. If the pair closes above this level, or maybe if it does reach uh, this area, we might change our mind. Might close the position. Okay, Mr. Rami, I hope that Mr. Rami Araj. I mean, even this is going to be the sixth time to enter the position. Nothing wrong with this. Six times is okay. Now the market is reaching our target. Look at this. The market is going downwards very sharply. We are reaching our target. Look at this. Enter the market here. 5 points. But keep in mind that the market is simply establishing like an uptrend. So I might close here, but if you would like to continue, it's okay. Okay, this position is very nice. Okay, the market is reaching our target. Here, our target is here. We're gonna wait. Okay. So this is our final target here. The market did reach our target. Congratulations on this. As you can see, you just want to wait. Look at this, like 8 pips. It's continuing going downwards, 10 pips. So look at this. Now, the market, as you can see here, the market, we went short from this area, this yellow area, from this level and this level. The market did hit our target. So congratulations on this. I hope that you have enjoyed the webinar of today. So that's it for today, guys. I hope that you have enjoyed the webinar today. Stay tuned for our upcoming webinar, and bye for now.